Imagine paying less tax than your neighbor, even though you earn way more money than them. Sounds illegal? It's not. In fact, some of the richest people in America do exactly that, and they're playing completely by the rules. Let's talk about millionaire tax loopholes, the kind the IRS doesn't exactly advertise, but are 100% legal if you know how to use them. Now, before you think this is some shady trick or offshore secret account situation, relax. No hidden islands, no fake companies, just smart use of the system that already exists. First one, and this is a big one, is something called the buy, borrow, die strategy. Sounds dramatic, right? But it's actually pretty simple. Let's say you buy stocks, real estate, or even a business, and it grows in value. Normally, if you sell it, you pay taxes on the profit. But what if you never sell? Instead, you borrow money against your assets. Example, you own stocks worth $1 million. Instead of selling and paying taxes, you go to a bank and borrow, say, $100,000 using those stocks as collateral. Here's the twist. Loans are not considered income, so no tax. You get cash in your pocket and legally pay zero tax on it. And when you pass away someday, yeah, a little dark, but stay with me, your assets get something called a step-up in basis. That means your heirs don't pay taxes on all that growth either. It's like hitting reset on the tax bill. That's why it's called buy, borrow, die. Next up, real estate depreciation. This one is almost funny when you first hear it. Let's say you buy a rental property. In real life, the property might actually be increasing in value every year. But for tax purposes, the IRS lets you pretend it's losing value over time. Yes, really, this loss is called depreciation. So even if you're making, say, $20,000 a year in rental income, on paper, it might look like you made zero, or even lost money, because of depreciation. And if you lost money, guess what? You pay less tax, sometimes none. Now here's another one that doesn't get talked about enough, the 1031 exchange. Let's break that down simply. You buy a property. It goes up in value. Normally, if you sell it, you'd owe capital gains tax. But with a 1031 exchange, you can sell that property and reinvest the money into another property without paying taxes right now. It's like saying, "Hey IRS, I'm not cashing out, I'm just upgrading." And the IRS goes, "Okay, we'll wait." You can keep doing this over and over again, growing your portfolio, delaying taxes for years, even decades. And if you combine this with the step-up in basis we talked about earlier, well, you start to see the bigger picture. Now let's talk about something a little more everyday. Retirement accounts. Not flashy, not secret, but insanely powerful if used right. Most people know about 401ks and IRAs, but what millionaires do differently is maximize them aggressively. They don't just contribute a little, they push the limits every year. And some even use strategies like the backdoor Roth IRA. Sounds complicated, but here's the simple idea. Even if your income is too high to contribute directly to a Roth IRA, there's a legal workaround that lets you get money in there anyway. Why does that matter? Because money inside a Roth IRA grows tax-free and can be withdrawn tax-free. Imagine building a retirement account where the IRS never takes a cut. That's huge. Now here's a loophole that's hiding in plain sight. Business expenses. If you have any kind of side hustle, freelancing, content creation, online store, you suddenly unlock a whole new world of deductions. Your laptop? Possibly deductible. Your internet bill? Partially deductible. Let's say you make $50,000 from your side hustle. If you can legally deduct $10,000 in expenses, you're now only taxed on $40,000. Same income, less tax. And here's a small but powerful mindset shift. The tax code is not just a set of rules, it's a set of incentives. The government rewards certain behaviors. Investing? Rewarded. Owning property? Rewarded. Starting a business? Rewarded. If you align with those behaviors, you naturally reduce your taxes. If you don't, you end up paying more. It's not about cheating the system. It's about understanding it. Now, quick reality check. Not every strategy here is for everyone. Some require capital. Some need planning. And yes, some need professional advice. But the real takeaway is this. Millionaires don't just earn differently. They think differently. They focus on assets instead of income. They use debt strategically. They understand timing. And most importantly, they learn the rules of the game. Because once you know the rules, you stop guessing and start playing smarter. So next time you hear someone say, "The rich don't pay taxes," it's not that simple. They do pay taxes, just a lot less than you'd expect. And now, you know why.